Okay, hi everybody. I'm recording this session on Friday afternoon. As you're aware, Mike's away at the moment, so I'm going to do the recording now so you can listen to it at the weekend. Now, I just want to start with referencing the dollar index, because this is the story of the moment with the situation in the States. Obviously, we don't want to predict or anticipate anything with regard to the political situation over there, but it's worth noting, just to kick off, that the dollar index is down at the lows. We're down below the area 76.32, where we've been with reference to these ellipses here in 08, the end of 09, and then the end of 2010. We're consolidating down here below these historical lows, and what we can see is the 73.90, which is the higher low from the all-time low in the dollar index. The higher low, we have a higher low above that at the 74.40. These two levels we want to be cognizant of in terms of reaction in the dollar. We've traded in the last week, as you can see, in this price action, we've traded below the 73.90 and the 74.40, only to reverse, and now coming to the end of this week, we are trading above the 74.40 level. Yes, the dollar index is the weakest instrument, the weakest currency out there, but it is susceptible, it has potential for a short covering rally above these 2 points. So on the balance of the analysis we're going to go through with the pairs, we want to be wary of the possibilities of a short covering rally in the dollar. It's had to soak up a lot of bearish news this week, and it's still maintained. It's going to end the week, if we assume this is the close of business, it's going to end the week above the 74.40. So this is something to be wary of. As the dollar is, we have to conclude the dollar is the weakest instrument out there. The Swiss is the strongest, so I just want to start with the dollar Swiss. Now you can see this, look at this dollar Swiss trend. Looking at the dollar Swiss trend, it's making lower lows and lower highs, lower lows and lower highs. This is an outstanding trend that has been in place for some time. Now, getting in the way of this is ill-advised. You can see with momentum preceding price the whole way down, these areas that some might see as support are merely points that we're selling. Momentum precedes price. The momentum lows, we expect further prices down. Now, the last momentum low we received was the 80.81. In terms of identifying structural points, the structural short has to be the 4 daily lows. At this point, there's nothing below here to reference. So in terms of our structural short, we're going to have the 79.89 level as our structural short, which are these 4 daily lows here, and the structural long is 80.81. It's not a structure. It's not a structural failure, but it certainly is a momentum low in the downtrend. And as you can see, we want them in the downtrend. We want the momentum lows to hold. So it's a little bit imaginative, and it's not strictly a reversal sign, but it's we simply do not have a failure to make a new low, so we can't identify a structural reversal. What we can do is at least take the momentum low on this daily chart, the momentum low on the downtrend, to be a long point. So the 80.81 then is going to be our structural long, 79.89 our structural short. Moving on to the 200 tick. As you can see, this is quite interesting. Look how we've, in this dollar Swiss, look how we've started to overlap range after range after range, and the daily lows, the daily lows and highs are now scrunching up into a much tighter band now. When we bring up when we get a little closer in, we can see actually how, on the near term, how volatile this is. So we need to be aware of that price action, and we don't want to get caught. We don't want to get caught in this price behavior, this mean reverting price behavior. So we need to be trading the peripheries of this as close as we can. I mean, the short, we're going to have the last daily low, which is the 4-day low as well, and that is the 79.90. So where the red line is here, that is our short point. Our short stop, we're going to have at the 80 level. If we're at the 80, we're going to at least accommodate the 3-day lows. So the short is 79.89. The short stop is the 80, the figure. To the upside, we don't have the opportunity. We don't want to get, again, we've got nothing that is presented to us within this broad band here. So we want to be trading the peripheries of at least all these sessions. So you've got 1, 2, 3, 4, 5, 6, 7. You've got 8 sessions. If we take the position, then out of these sessions, and we want to take a long above the 4-day lows, accommodating all the sessions. So we accommodate the 4 daily lows, and we accommodate the last 8 sessions. An appropriate spot would be the 80.25. So the nearest long point. Now remember, our bias is to the downside in this. This is in a heavy trend to the downside. The 80.25 will be our nearest long point, and the long stop. Okay, so you've got the long at the green line. The long stop is going to be 80.15. Just a bit of room because of this nature, this mean reversion. We don't want to get caught. Now this is, you see what it's done before. It's come back and traded down to the lows. It's very, you see these moves here. Okay, we don't want to get pulled around by that, so we're going to have the stop quite close. We're going to have the long stop then at 80.15. All these levels I'm going to put on the radar screen, and to have that as the recording at the end. So the red line's the short, green line's the long. Long stop 80.15, short stop at the 80. Structural long 80.81, structural short 79.89. So the structural short and the short at the same point. Okay. Moving on.